Yes, folks, you are in the right place. Give us a couple of minutes for people to log on and join us, but this is the webinar on scaling up China's green and sustainable market. Takeaways from our being released today, China Investor Survey. Hang fire for a few minutes while everyone logs in. Mari, will you tell me when to get going, please?
Whenever you want. Good.
Thank you very much. And let me start. Ladies and gentlemen, I'm Sean Kidney. I'm the CEO of the Climate Bonds Initiative. This webinar, just in case you had any doubts at all, is about scaling up China's green and sustainable market. Takeaways from the new China Investor Survey that we are releasing today, and a link will appear any moment if it hasn't already appeared in the chat box on the side. We have with us a pretty cool lineup of speakers. We've got Julian Martin, who's the Managing Director, Head of Emerging Business Development Markets at the Hong Kong Stock Exchange. We've got Olivia Menard, who's the Head of Green and Sustainable Hub Asia Pacific at Natixis, one of the leading green bond bankers in the world. We've got my very good friend, Dr. Peiwan Guo, who's the Chief Executive Officer of Sintao. And we've got Norbert Ling, who's the ESG Credit Portfolio Manager at Invesco Fixed Income Asia Pacific. And Invesco, just in case you had any doubts at all, is one of the largest investors in the world. And we have Manshu Deng, who's the Research Manager of our China program for the Climate Bonds Initiative, who will do a short presentation on the whole project in a minute. Just as a bit of a scene setting, you kind of know if you're dialing in today what the challenges are. You know about you might have heard about the Intergovernmental Panel on Climate Change report over the last couple of weeks, and the extraordinary, the terrifying parts of that report around the impact of climate change on current trajectories if we don't take action by 2030. In fact, they've said globally, on average, we need to cut emissions by 50% by 2030 to be able to avoid catastrophic climate change. Now, that doesn't mean every country cuts by 50%. It means we have to average. And of course, some countries have to cut more because of historical emissions, etc. But the point is, it's an incredibly tough challenge, given that emissions went up 6% last year. A month or so before, we saw the release of the IPCC adaptation report, which told us very clearly that climate change is happening. And whatever happens, we have to now hurriedly, rapidly, quickly prepare for the shocks that are coming through around the impacts of climate change, because we're not getting emissions down to stop climate change anymore. That is too late. We're getting emissions down to stop catastrophic climate change while we prepare for the climate change that is now baked into our system that we cannot avoid. That is unfortunately the truth of the matter. So resilience investments of various sorts, physical, as well as social and economic. We've learned a lot about those during the pandemic, which after all is a crisis rooted in the collapse of biodiversity linked to climate change. We've learned a lot about much more than physical adaptation. These investments now need to become priorities going forward. We have to protect the city of Shanghai to make sure it doesn't get totally flooded in a monsoon combined with a sea level rise, new typhoons, which Shanghai, as you know, is becoming a typhoon zone now, but it wasn't in the past. That requires coastal defenses, but it also requires investment in the infrastructure of the whole Shanghai area on the assumption that it will get flooded and we can recover the next morning. Rubberizing the electrical lines in the subway, for example, will mean we can simply pump the water out and get it operating again afterwards, because we cannot stop what's going to happen. We have to prepare to be resilient to what happens. That is a very different paradigm shift. So there are many things to do, but the most important task is mitigation. It's a vast challenge. In China alone, we see that we need something like 140 trillion renminbi between now and 2060 to be invested in the mitigation challenge. And that's probably an underestimate, frankly. That's equivalent of $22 trillion. It's a huge capital investment required just on the mitigation side before we properly tackle resilience, where forecasts are simply not available yet because it kind of affects everything that we do. The good news is that we know what to do. The technologies are largely in place. Don't get me wrong. Research and development is incredibly valuable and will optimize efficiency and profitability of the solutions coming through. But we don't need to wait for that. There is nothing stopping us acting now. And what we also know, let's take what we've done with electric vehicles in China. When we engineer large-scale procurement, research and development and innovation gets sucked in behind it and then fuels the engine of change. And electric vehicles are a classic example where the innovation in that sector is extraordinary on a month-by-month basis, which is actually fueling the global shift to electric vehicles, which we will see happening this decade. We don't really expect to see petrol vehicles being a feature of the auto industry by 2030, way ahead of the government targets because the changes that happen. That's looking like a win. We have already had a win in renewable energy, thanks to large-scale procurement organized by governments in Germany and Europe and then in China. Over the last 20 years, the cost of renewable energy has dropped like a stone and continues to drop like a stone. So that in most tropical countries now, renewable energy are cheaper than fossil fuel alternatives. It's sort of game over for coal and gas. There's still an issue of ensuring the lights are switched on and we have enough capacity, but that is shifting very quickly at the moment, compounded by the push in Europe because of the war in Ukraine to shift away from fossil fuels to clean energy, which will further fuel the global shift because it'll suck in more innovation and capital in that direction. So the changes are happening, but unfortunately, we have done nowhere near enough. We've really we've got about 10% of the investment that we need happening so far globally. That means a massive scaling up very quickly. So when we talk about 140 trillion renminbi between now and 2060, we're at a tiny portion of that, and we need to get up in the next couple of years and then maintain investment for a long period. That's what it looks like here. We have some other successes. We have proven with the green bond and the related markets like sustainable bonds and social bonds, the daughters of green bonds, using the same format. We have proven that we can mobilize investors. It is no longer an abstract idea. China's green bond market has been an extraordinary success. Ever since I was privileged to be a member of the Green Finance Task Force chaired by Dr. Ma Jun in 2014, which led to recommendations that the People's Bank of China, to my sheer delight, adopted at the beginning of 2015. And Pei Yun, when you and I were on that committee together, that was an extraordinary shift in terms of regulatory interest and motivation and engagement on this issue, which led to green bond regulations, the green projects catalogue, and a variety of other measures, including incentives in the market. That's fueled now the market. China is now the world's third largest green bond market and growing like a rocket this year. At least it looks like it. We're still relatively early in the year, but very positive so far. But it's not enough. It's a proof of concept. It is not that we have solved the problem. Now we need a lot more deals. We also need capital from overseas. It was very clear in that People's Bank of China Green Finance Task Force report that we published in 2015 that capital would need to be mobilized globally to support China's transition. That there would be not enough public sector resources, private in China. We would need to supplement that with international capital so that the issuance of green bonds from Chinese issuers for international investors is a key part of that. We've seen China Development Bank, ICBC, Bank of China, and many other parties do this, but we're going to need a lot more by the time we finish, which means engagement between international capital markets and where they're going, and domestic is important. But of course, in the domestic situation, we now need to shift from what I'd call the startup of the green bond market which is largely engagement with banks and some sectors of the finance and investment community into the broader investment community. And this is why this report is so important going forward. This report, which is a survey of investors looking at their appetite for these kinds of instruments, is meant to be a primer for the next stage of large-scale development, the next stage of mobilization of capital. This report is very much being designed as active support for the measures regulators have been taking and are taking on their side with guidance and oversight of this market. It is meant to be a primer for getting capital to flow. We need to get a lot of capital to flow. Yes, we need the bankers like Olivia to be doing their job to get capital to flow. But before we put Olivia on the spot, which we will do in a few minutes, and Julian looking at Green Bond Connect, which is such an important issue, before we put them on the spot, we have to look at the macro picture. We have to look at what investors are saying and how we match market demand with market appetite. And for this, I want to introduce the fabulous, the extraordinary, the wonderful Manshu Deng. Okay, I'm biased. She's our research manager at the China Bond Program. But I'd like her to run us through the key findings of the report, and then we'll turn to our illustrious panel for comment. If you want to ask a question, use the Q&A button at the bottom of the screen. Please type it in. I'll be scanning for questions and putting them to our panel, or trying to answer some in text if necessary. And remember, this webinar is being recorded. It will be available afterwards, certainly on YouTube, and we're looking at other platforms in China. We'll give you more details later. Thank you very much for joining us. Manshu, over to you.
Can you hear me well and see the slides? Okay, thank you very much, Sean, for the introduction. This context really gives meaning to everything we do here every day. So the next, allow me to walk you briefly the key findings from this survey. This is the second in a series that we conducted on green bond investors. The first one was based on conversation with European investors, and this report is focused on China. And allow me to highlight some of the key findings up front. First of all, we have identified clearly investor demand for more high quality Chinese bonds in the market. And also, when investors are looking at making their investment decisions, green credentials and credit fundamentals came up as the top priorities. And it is agreed among investors, respondents, that more actions needed to bring the scale. So let's look at, where does China stand now? As Sean mentioned, China, as of last year, end of last year, China stood as the third largest debt market in the world. Its cumulative green bond issuance reached $200 billion US dollars, and is the second in terms of green bond. It is the third largest in terms of sustainable debt market. That includes GSS Plus, which includes more innovations like SLB and transition bonds. But the question is this enough? And the answer is no, unfortunately. That, and based on estimates from various organizations, that the current investment level cannot support the China to reach its carbon goal. Here we highlighted several from IEA, Institute of Climate Change and Sustainable Development, from Tsinghua University, and also from RMI, Investment Association of China, all indicating that we are facing a funding gap in order to meet China's carbon neutrality goals. So this survey is really conducted in this backdrop. And to conduct this survey, we have worked together with Xingtao Green Finance, and this is sponsored by Hong Kong Exchange and Texas. So many thanks for those parties in sponsoring this endeavor. And the survey respondents were selected from a list of China's largest green investors maintained by the National Association of Financial Institutional Investors, and by the short name NAFMI. And it is a self-regulatory body overseen by PBOC, China's central bank. And also international investors were also selected who are active in China's onshore green bond market, were also selected to participate in this survey. We sent out 89 invitations and received 42 valid responses. And out of these 42, 16 were international and 26 were domestic. And in terms of respondent type, it varied from asset managers, mutual funds, banks, and some chose to remain anonymous. And also, let me point out that 5 out of the 6 state-owned commercial banks were also among the respondents. So for typical questions, and we designed this with 30 questions across 6 broad categories. Typical questions that we asked include, where does Chinese green bond market sit in your investment strategy? And what is your current holding in terms of issuer type? What is your current holding in terms of user proceeds categories? And where would you like to see more issuance coming out of the market in terms of issuer type, in terms of UOP? And when you are making your investment decisions, what are the factors that you look into mostly? Is it standard, disclosure? What other factors you would like to highlight? And as China opens up its capital market, we also designed some questions specific for international respondents, asking them to tell us what challenges, what difficulties do you face, and what access channels do you use most in accessing the Chinese market? And where do you see the market is going? And what needs to be done? What are the next steps to bring this market further? And here, allow me to go through some of the key findings. So here, for this one, the respondents were asked, could you please describe how green bonds have been incorporated in your investment decisions right now? And this is a multiple choice question, so the addition can go up above 100%. And as you can see, almost 70% of respondents, both domestic and international, responded that they would prefer green bonds where available and where pricing were competitive. And there's 50% highlighted targets were the driving factor. And there's more international respondents highlighted that they hold green bond funds. So this indicates that green bonds have been an overall permeated the investment policies of a broad range of investors. But there is more of a sophistication among the international respondents in terms of incorporating green bonds in their responsible investment strategy. And here we asked on the chart on the left, we asked the respondents to tell us their current holding in terms of issuer type. And as highlighted here, financial and non-financial corporates were the top 2 issuer type categories in their current holding. But when we ask the respondents to tell us where would you like to, they would like to see more issuance, it's basically across the board. It is not limited to just non-financial or financial corporate bonds. It is also issuance from policy banks, local governments, and government-backed entities. So here it tells us implied that the demand is there in all across the different issuer types. And we also asked, where does the respondents have the current holding in terms of UOP? So among the international respondents, the top 2 were renewable energy and transport. Among domestic, the top 2 were renewable energy and building. So, but overall, renewable energy really stood out as the top category. And if you look at our data collected by Climate Bonds Initiative, that renewable energy and low carbon building, low carbon transport were really the 3 largest categories in terms of issuance in 2021 in China. And if you look at the growth, renewable energy grew almost 4 times, and low carbon transport grew almost 100%. So overall, 90% of issuance came out of renewable energy, low carbon building, and low carbon transport. But if you ask the respondents, where would you like to see in terms of UOP? Where would you like to see more issuance? So again, it's all across the different UOP. It's not limited to just renewable energy, transport, and building. It's also water, land use, and industry, and waste. So that also tells us that there is demand across all kinds of UOP user proceeds categories. We asked respondents, are you investing in other thematic labeled green, other than green bonds? And the answer is yes. Over 90% of respondents said that they have already bought social or sustainability bonds. And this is also consistent with what we see in the market in terms of issuance. In overall, if you look at the chart on the right, the overall Chinese thematic debt market has reached $290 billion. And 200 of them were green, which indicates about 60%. And then the other 25% is social. So, but we can see there is a bit more of, among the international investors, there is more appetite in incorporating the social element in their investment decisions, even though the overall impact of social bonds were not as impactful as the green bonds. And respondents would like to, what factors would you consider to be most important when you are making your investment decisions? And we have given them several measures to choose from: credit rating constraints, currency or issuer sector constraints, minimum size of instruments, or green credentials at issuance, post-issuance, or pricing. And domestic investors tilted towards more on credit rating and the fundamentals, while international respondents tilted more on green credentials at issuance. And this reminded us that green bond essentially is a regular bond with green label. It has its own characteristics with certain requirements on your selection of projects and management of proceeds, and also commitment to report post-issuance. And just to give you a flavor statistically of how important green integrity and disclosure is, over 60% of respondents indicated that they would not buy a green bond if they did not know where the proceeds were to be used. And 3/4 of the respondents indicated that they would sell green bonds if the post-issuance disclosure were poor. So that is how important green credential is, and how important disclosure and transparency is. So the next question is, where do respondents see in terms of market tools and mechanisms can support investment? So for domestic respondents, they ticked all the boxes. Everything is important. But you can see a little bit more polarization among the international respondents, that they highlighted that positive credit fundamentals were top key. And also in terms of policy mechanisms, how would those elements support investment? So again, domestic respondents said everything is important, let's tick all the boxes. And you can see among international respondents that they would like to see more mandatory disclosure in accordance with TCFD, more clarity on standard, more definition on clarity. And we followed this question asking them to say, how strict do you think that the standards should be? And the answer is about half and half. Some said, we would like to say to have the standard to be very strict to avoid greenwashing. And some said, okay, let's not have the standard to be too strict, and this could allow the market to grow, or more issuer types could come and join the market. But these highlights some of the competing concerns of Chinese green policy have to address in the future. So these highlights the several key findings from this report. That is, there is clearly investor demand for more high quality Chinese green bonds. And in making decisions, green credentials and credit fundamentals were top priorities. And investors would like to see more market and policy tools that's to bring this required scale. So that's about it. I look forward to the good discussion. Thank you so much. Back to you, Sean.
Thank you, Manchu. That's fantastic. A lot of work in this report. So congratulations to the team on getting it done and getting it out. And thank you very much to our sponsors, as you said before. What I'd like to do today is to start off with a word from Julian from the Hong Kong Stock Exchange. And there's a reason for that. I mean, normally in one of these webinars, to be quite honest, everyone, we would go to Norbert first, because at the end of the day, investors are driving the global market. But Julian, you've been involved in the development of Bond Connect, which I have to say is one of the most important initiatives for green bond investors, putting aside everyone else. I don't care about the rest. I only care about green bond investors globally in getting access to the Chinese market. And of course, Hong Kong Stock Exchange has worked very hard, thanks to your colleagues, Grace and so on, to grow the green finance side of the Hong Kong Stock Exchange. And I think this is a really important part of responding to investor demand. So I'm going to start with you, but your reflections and your thoughts on how we do grow this market. And for our listeners out there, I mentioned that we need to invest something like 140 trillion up till 2060 in renminbi, that is. We currently have about 1.6 trillion outstanding of green bonds in the Chinese market. That's a fairly large scaling up to go. Julian, and then I'm going to go to Norbert afterwards.
So it's 1.6 trillion over a market of 20 trillion. It will require a lot of changes. But I want to start by saying that whatever we look at, China is still at the forefront of a lot of these developments. And it's not only because of something like Bond Connect or access from international investors. There's actually a very strong demand locally for the market itself. I think so. Obviously, the more we are facilitating exchanges in the Chinese fixed income market, the better it's going to be for investors in general. But I think looking at where we are now and the progress that we've made over the last few years, I'd say one of the key elements that we need to do is continuing moving on the track to ensure that we have a culture which looks at every single fixed income security and whether this fixed income security is actually sustainable, impactful, renewable, right? And it should become the norm. You know, it shouldn't be 5 to 7% of the market. It should be 75% of the market, and it should continue to grow, right? I think most of the banks now, when they look at their loan portfolio, they will have a way of marking their portfolio according to whatever sustainability criteria every single bank is implementing. I think for the fixed income market, that should become a norm as well. We shouldn't have ESG practices in financial institutions. This should be a risk and a practice which is entrenched in everything we do, right? So I think this change in mentality, and I actually see that a lot more in most of the Chinese financial institutions and the banks that are here very active in Hong Kong also have this practice and this change of mentality. And that's, in my view, only starting, but we need to accelerate it. The second thing is we need more common ground taxonomy. We need to continue working on standards. I know, you know, the Green Finance Association, the Hong Kong Green Finance Association, the GBA Green Finance Association, lots of people are working on that. But bridging EU taxonomy with China taxonomy is something which is super high on the agenda of our cross-agency steering group here in Hong Kong. I mean, the ESFC is directly involved in this, and we are so high on this agenda. I think that's a really, really important part because whatever we do, the more exchanges we can do cross-border through any kind of models that we have, these common ground taxonomy is going to be very, very powerful. I think we need more alignment as well in terms of standards and reporting. I think that was really very well explained by Manchu, and I'm not surprised this has become a very important topic for a lot of investors. I'll stop there with my last point, which is really this whole technology monitoring we have, and we need to work on, application of blockchain in order to track, the life cycle of green financing, the link between green financing, green fixed income, and carbon markets, the mitigation outcome instruments that some are, pushing as the new format for green markets, green bond markets. I think all of that is also going to be part of the acceleration of the whole process, because at the end of the day, I mean, no global investor should be investing in anything that is not recognized as sustainable anymore. I think that should be the trend that we have.
Now, you heard it here, everyone, first from Julian Martin of the Hong Kong Exchange, that this is going to become mainstream and no global investor should be investing about this in mind. This is a, well, for you journalists out there, this is a very much quotable quote, and absolutely correct in going forward. Julian, you mentioned risk, and I want to go to Norbert about this. Of course, this market has not been driven globally by investors saying, oh, I want to save the planet. It's been driven by risk. It's been driven by the arbitrage between an understanding of long-term risk and short-term action. We had the large institutional investors that have driven this market were very clear some 10 years ago in talking to me that they saw the potential for portfolio decimation under climate change scenarios going forward. Anything that might reduce that risk had to be seen as an urgent imperative for investors. But the challenge is we all manage our portfolios at 5-year horizons. So managing the risk with also the tools we have, the short-term, more modern portfolio theory horizon, has been a challenge, and that's what a green bond is about. It meets the short-term risk yield requirements plus addresses a long-term risk. So it's a win-win. It's fantastic, and that's why to take it off globally, a simple instrument. But I want to stress, it is risk that's underpinned the global growth. And that sense of risk is reflected now in the way global investors, certainly in hard currencies, and we're now seeing this beginning to appear in yuan, are pricing these differentially. Now, they're pricing differently because these bonds perform better in the secondary market. They're more valuable. They're less likely to be eroded in value, and that is driving primary demand. So we're getting tighter pricing in US dollars and in yuan. And as I said, we're beginning to see that in yuan now. So that's a question, but it is very much based on an understanding of the value and risk. I think, well, maybe I'm wrong. This is for Norbert now. Norbert, Invesco is one of the world's largest investors. Your perspective first, have I been speaking out of my hat? But also, more importantly, what do you think of the report and what we said from your perspective?
Thank you, Sean. I think one of the key points that you can see in the report earlier was about people want more green bonds, want wide range of use of proceeds. So to me, as an investor, we want more sectors issuing green bonds. As what Julian had said earlier, the first question we ask any issuer is, why are you not issuing a green bond? And it's not just issuing green bond. Issuing a green bond comes hand in hand with having a transition strategy. So I think taking a step back and you could, to answer your question about risk. So if you think about credit risk and how portfolio management is, we want a diversified sector-based, diversified issuer list. And if I look at the offshore market as a simple proxy today, only about 10% of issuers outstanding have green bonds. And given the whole scope of financing kind of scale that we're facing, this is not enough. So I think this angle of how we tackle portfolio risk and credit risk is key in terms of evaluating each green bond. And climate risk is also a form of credit risk. And this angle in terms of how international investors apply this lens of assessing ESG from each sector, each issuer is going to be critical. And I also offer a statistic to everybody to kind of think and take away. Like sometimes we as investors, we use external data providers like MSCI or Sustainalytics in the international, especially in the offshore lens. But if you look at the coverage they have of Chinese issuers, it's just 60%. So these kind of, what this leads to is we need more data, we need more disclosure direct for issuers, and we as international investors are ready to do this engagement to work with companies we're invested in. And another point which I think Manshu said in the report that I really like is how we can look at alignment with national policy. Because I think how we investing in China is about investing in China's decarbonization plan from the top-down level. and alignment of companies' transition to the national plan and the investment opportunity. This is what we as international investors should really focus on.
That's a really good point. And of course, we have, very robust goals. President Xi Jinping's 30-60 strategy is in play. And, it looks, to be honest, the commentators I'm reading are saying we will beat those targets, but we will need capital to be able to beat them. The science is there, the willingness is there, but it's got to be funded going through. And green bonds are going to be a big part of that. I'm going to come back to you, Norbert, because that voice has got to be ringing from the rooftops, which you said. But I want to go to Olivia, because Natixis has been one of the leading green bond bankers on the international scene. Natixis, your thoughts about this and the extent to which you see the opportunities to rapidly grow this market?
Yes, look, I mean, I'll be completely aligned with what Julien and Norbert were saying, and your introduction, Sean, and what Manchu has summarized of the survey. Look, there is a huge expansion to come. So far, as you rightly pointed out, financial institutions and limited sectors have been active on that particular market. In the discussion we're having as a bank with issuers or with borrowers on the loan side, we see that the green bond or the green loan market will expand outside of what Manchu was designing, was describing, i.e., mostly renewable energy, low carbon transport, and we see those high emitting companies in China sincerely trying to have an organized approach vis-à-vis their own energy transition, vis-à-vis their decarbonization drivers, which will allow them to clearly be actors on the green bond market, be as well actors on the sustainability-linked bond market one day, be it from the steel industry, from the cement industry, from all those high-emitting industries. For that to happen, obviously, and that was a point raised by Julien, green credentials will be key for international investors to be able to buy the paper. There is an alignment of or an harmonization of criteria or credentials or integrity. This market is becoming global, and for international investors to put money that you were mentioning, Sean, is required to transition to make the Chinese transition a success. There will need to be an alignment of transparency requirements, reporting, verifiers. As a bank, we are obviously partly responsible for that in the way we are advising clients. Second-party opinion providers are as well very important, verifiers, investors, regulators. Julien was mentioning the China, the common ground taxonomy. It will be a fantastic tool allowing investors to, in a fluid way, invest cross-border for the Chinese to invest in Europe and for European to, or for the rest of the world to invest in China. So let's be optimistic. For sure, there is a lot to do, but with all the discussions as we can see happening those days, with all the discussion I'm sure we are all having around that table with many players, there is a sincere willingness to make this happen. With discipline and robustness, we'll be able to achieve that.
Olivia, you talked about common approaches, standards, just standards, reporting, etc. How useful do you think the common ground taxonomy that you're very familiar with will be in that thinking about the alignment between international and domestic? Is that important, or is there a long way to go?
It's important because when you think about it, taxonomies are very difficult to read, very difficult to understand. There are papers like this. It's like IPCC reports. You need to read summary to understand what it means. It's same for the taxonomy. So a common ground taxonomy is at least allowing to match two taxonomies, which are today the most important one in the world, the EU and the Chinese one, which are the two, if not the most important markets, Chinese one and the European one. It should allow people to have more transparency on the market, to have a better understanding of the product that they're gonna buy, both in China or in Europe. So it is key. It is really key.
I am so relieved he said that. I'm going to say, because our team has been working on that for a year on behalf of the European Commission with Dr. Marjun's team at Tsinghua University on the PBOC side. But I'm never sure it really works out there. And of course, it's difficult because there are different conceptions. So that's not the mystic view. Thank you, Olivia. I appreciate that. My team appreciates it. Pay one. You know, we've been talking about this since we were together on the Green Finance Task Force. And I still remember Simon Zardek turning around and introducing you at an event at Redmond University and saying, this man Pei Wan is incredibly important to the Chinese green finance market. I had no idea who you were at the moment, but of course he was right. You've been a driver of responsible investment in China for a long time. What's your perspective on this, and more to the point on the domestic investor perceptions and where they're up to in the scheme of things?
Yeah, thanks. Yes, I recall our first meeting in Beijing. That was several years ago, and so I'm several years older than that time. And we also realized the significant change of the market landscape. So I want to just add some comments on the so-called common ground taxonomy. I still remember in 2016, one famous saying about Chinese green bond market is China is growing from 0 to hero. That was in that year, right? So 7 years ago. And at the time, the market landscape is that we need a new product and we need a standard. So the problem at that time was we did not have standard, no standard. Of course, then we introduced CBI, right? and several years later, we face another problem under this new landscape that we have too many standards. So how to realize and harmonize, how to harmonize all these different standards will be a critical question that we need to answer. And I think this will be a critical issue for the investor to consider, of course. And therefore, I think common ground taxonomy, thanks for your work and Dr. Marjun's work, I think it's a groundbreaking methodology and approach to figure out a new way, not just to make everything the same, but let's see how we can find the common ground. So I really like this approach. I'm not quite sure whether this approach will work well this quarter or this half year, but over years, I think this is an innovative approach. And back to your question, I think everybody are thinking about how to scale up the market, right? Scaling up the market, everybody is concerned. Investor concerned, stock market's concerned, and also government's concerned, because we need more money and the market needs liquidity as well. So market size is always important. And I think thinking about this issue from China, I think there are two big factors. One is market driver, another is policy driver. For the market driver, I think particularly further connecting with the global market will be a very, very important way. So common ground taxonomy, of course, will serve this purpose. And of course, last year we also upgrade our green bond standard, right? So this actually make our standard further harmonized with the global one, particularly the European system of finance taxonomy. So this is about the market driver. From the policy driver, I think we also did another joint research together with CBI about the policy and post-issuance transparency in China's bond market. And we realized actually, if you allocate the bond issuance by months, one by one, and then you will see two peak seasons last year. One is around February, one is about May. Why? Because two new products were created by NAFMI at that time. One is carbon neutrality bond. Second is sustainability linked bond in May. So I think this is a good example how we understand the market mechanism in Chinese domestic bond market. I think the regulator drive is also critical. And very important information that we need to recognize last year in Chinese bond market is that the central bank include the bond portfolio as part of their rating methodology for the commercial banks. In the old day, they only count in the green credit or green loan. But starting from last year, end of last year, our central bank say that all the commercial banks can count green bond portfolio equally as the green loan. So I think this actually create driving factors for commercial bank, who are the largest investor in Chinese interbank bond market. And I think this actually also show us how the regulator develops some policy instrument to drive the market. So I think both sides, policy and market drivers, are very critical in China.
It is interesting the extent to which the policy drivers have been deployed, and full credit to the People's Bank of China in particular, and to the other regulators for having done that globally. I mean, I think the rest of the world's central banks and regulators are in the process of learning still from what PBOC has done to grow the market. Of course, the challenge is that with incentives, I'll take the interbank market, with incentives, what we've had is a lot of banks investing because they've got an incentive to actually hold green bonds, which has been great, including liquidity lending window of the central bank, benefits there, etc. But what we haven't necessarily done as much as we would like at the same time is build a bedrock of investor demand amongst institutional investors, pension funds and insurance companies. So we're a bit doing things in different order to in Europe or the USA, where we started with that particular market. So I guess there's a question to you, Norbert, really. The next stage for the Chinese market has got to be to build up that appetite amongst the class that's only modestly engaged this stage, which is fund managers and asset owners. Your perspective on that, and also your perspective on something important that Pei Wan raised, which is the carbon neutrality bond, which I'm going to put it as in different types of thematic issuance. Are you happy, or do you see this as a plethora of difficult, complicated, different? Would you prefer everything is green? I remember Ashley Shulton of BlackRock once said to me, as the head of green bonds there, well, people stop these other things, just make it green, green, green. That was her view. And yet we have seen this growth of different bonds, not only from regulated drivers like in China, but organically in the market. How's Invesco handling that?
I think the word greenwashing only came up maybe 2 times earlier throughout this whole conversation, which was quite happy. It didn't went bingo, bingo, bingo. So I'll give credit to how like what Pei Wan has talked about, where market and policy drivers has led to the formation of carbon neutrality bonds. So as a market participant, we work with our end clients or asset owners. They always ask us, are you afraid of greenwashing, not just in China, but in any parts of the world? And the typical asset manager answer has always been that you have a standard template to evaluate the green bonds, unlike with the generally accepted market principles that you see in IGMA from CBI. And what I find really exciting about the carbon neutrality bond format in China is that actually it sets this framework of how international investors evaluate the green bond and at the highest threshold. So basically restricting the kind of use of proceeds into a more narrow category, more impact reporting, and also requiring some transition pathway. So these are like literally the checklist of ABC, what an international investor would look at when evaluating a green bond. So I think this is something that is to be lauded in terms of innovation, in terms of structuring, and also comes back to the point that we talked about the linkage to national policy. I think the main difficulty when explaining about what a carbon neutrality bond is, it also comes back to the EU common ground taxonomy that everyone talked about. This concept of carbon neutrality bond has come out of China, but hasn't come out in other jurisdictions. So my hope is that as more jurisdictions move towards carbon neutrality bonds, especially as we investors all look at net zero, we have a common global alignment on what it means to be a carbon neutrality bond. So this is my hope that the whole global international sustainable finance move towards.
There you go. The international finance will move to mirroring what's happening in China. You heard it here first. I'm going to ask Julian at this point, in terms of what you're seeing in terms of the actual numbers around investor demand coming through the Hong Kong Stock Exchange, and go back to the point about next steps to grow the market, to really make this huge market. I'm always conscious of this thing that we need to be so much bigger than we are, even though you're perfectly right, we haven't done too badly getting to the stage we're at.
I'll start by, I think there are many levers that we can use to actually make this market bigger and better. Clearly, for the international and Chinese buy-side practices to evolve, for them to include or basically filter in or filter out, the issuers with the right rating, with the right kind of disclosure, with the right type of paper, with the right type of bonds, right, is something that is already happening. And I think there's not a single discussion that we're having, either for people who are accessing China through us or people who are looking at the Hong Kong market itself in dollars or in RMB. There's not a single discussion where this is not a topic from global asset managers or Chinese asset managers. Obviously, there's still some differences, some kind of principle differences in practices about energy mix and so on and so forth. But I think we're going to get there. But I think there's, in my view, in order to grow this market, we need to grow both the demand and the supply. And in order to grow the demand, there's a whole lot of issuers, and that's true for bonds, but that's also true for stocks, right? There's a whole lot of infrastructure issuers, corporates that are committing to a net zero path, and that will require a whole lot of work they probably do not yet realize is going to be on their plate. And we are going to be implementing TCFD by 2025. We're working on ISSB with IOSCO. We are going to be increasing the amount of disclosure on all of our issuers here in Hong Kong, with a view that in partnership with you guys and with others around the Greater China, we can expand that even bigger into Asia. By growing disclosure, by making the disclosure more efficient, more relevant, better calculated, by default, we are going to be increasing demand. The supply will, to some extent, come relatively naturally, because when the demand is going to be much higher, and I think you mentioned the amount of gap we have, $22 trillion. I was looking at the carbon market. I think we're looking at 35 gigatons of carbon, which we're missing both on supply and demand as well. Once we have addressed the demand, the supply is going to come. And as I mentioned, I think the supply will come by the fact that every single bonds in the world eventually is going to be ranked as either sustainable, non-sustainable, impactful, non-impactful, right? So by default, I think a lot of people could just add up a little bit of extra research or a little bit of extra verification on their paper in order to get their bonds become, to some extent green or greener, but a lot of people don't do that. Then the process in the middle, once you've addressed the demand and the supply, the process in the middle, the regulators, the infrastructures like us, the technology, we are going to adapt and we are going to be there to really facilitate it. And that's about, principles, how to get to net zero, how to agree on taxonomy, how to agree on infrastructure, how to agree on monitoring. This process, to some extent, is in the hands of the regulators and infrastructure providers like us. But in order to push supply and demand, we do need to work harder, I think.
You're doing some infrastructure reasons. We're running out of time, but I just want to quickly say, you've got this stage program, sustainable bonds and so on. Just tell us what that is. And also, I heard you're working on green bond tokenization. I've got no idea what that means, but it's deeply intriguing. Just briefly tell us.
Okay, so it's very simple. Again, technology helps you create those mitigation outcome instruments, right? So by applying technology on the green bond, and that could be blockchain technology, which is super transparent, provided you use the right blockchain with proof of stake and so on and so forth. But you know, you can actually look at new technology in order to certify and verify the greenness of your projects across the lifetime of the project, right? And out of that, you can actually obtain either extra yield for the investor, reduced yield for the issuer by issuing the carbon credit, right? So the carbon credit becomes a mitigation instrument that you have on the back of your fixed income security. And that provides extra benefits for investors and lower cost of funding for issuers. That's what I think, you know, this whole tokenization of green bonds eventually is going to lead to.
I guess, Norbert, what's not to like? But no, let's come back to that. Extra yield for the same risk level sounds great to me. We need to wrap up. I need final comments, but Olivia, I really need you to tell us what you're seeing on the issuance side, because the secret to the growth of this market has got to be a lot more deal flow. We have a strong level of demand. The investor report makes it quite clear that there is actually a strength of demand there. Globally, the challenge is the lack of actual deals coming to the table. What's your prognosis about how this is going to work and what we've got to do to grow the market to achieve Julian's vision, thank you, Julian, of everything being green or mainstreaming this?
Yeah, Sean, thank you. And indeed, I wanted to comment on Julien. Very good summary of the market with the supply and the demand, and definitely on the supply side. I have not the ability to share my agenda with you, my Outlook agenda, but I can tell you it's full of meetings with clients from China and from APAC who wants to access the green bond market, who wants to access the social bond market, the sustainability green bond market. Some are mature enough, so some are, I can tell you, nowhere. But we are here to accompany them. We are here to teach them how it works, to help them to define their sustainability strategy, to embed that sustainability strategy into their funding strategy. And what we are doing at the Green Hub at Natixis, I mean, all the banks are doing it, of course. We are all super busy. All the sustainable finance teams of all the banks in the market, advising clients, doing awareness exercise. There is a lot of awareness to be done, explaining that committing to a net zero commitment is good, but this is definitely not enough. You need a pathway. You need a science-based trajectory. You need accurate ESG data. Blockchain, Julien was mentioning, will be essential. So we need all those tools. We need a lot of awareness. This is what we're doing for that market, for the supply to grow, and it will grow. I cannot share my deal pipe with you, but there are many things happening, and innovative stuff will arrive as well. So yes, supply will be here for Pei-Yuan, for Norbert, for all investors, for Julien to exchange those papers between China and the rest of the world. Definitely, the paper is coming.
Such good news. Last comments. Pei-Yuan.
Yeah, last 3 comments. I think this is very enlightening discussion. Just want to highlight 3 things from my point of view. Number 1, I think people talk, well, we actually quite care about the quality and also the disclosure, transparency, etc. And I think this will continue to be important issue, and we need to further strengthen these issues, particularly not just disclosure, but also like the level of green. So we can, define which is green, dark green, which is light green. I think all those systems will need to be applied to the market sooner or later. Second, within the overall bigger picture of GSS bond, green social sustainability bond, I think in China we still focus a lot on the green bond, but I think people are now starting to talk about transition finance, sustainability linked bonds, sustainability linked loan, and also the Bloom social bonds, etc. I think this also creates some more potential for future market. Point number 3 is that out of this GSS bond, green social and sustainability bond, I just want to echo to Julian's idea on the tokenization, etc. I'm thinking about the carbon market, and I also look closely at the Chinese carbon market. But our basic idea is that maybe in the next stage or in the future, how we can consider to securitize the carbon dioxide removal will be important. That will be a system out from this so-called cap and trade market system. Cap and trade carbon market system, I think, in its nature have some limitation, like the size, like the cost of transaction, etc. So carbon removal technology will be important, but I think we need to find a way how we can securitize this kind of technology. Maybe a bond will be one, but perhaps some other instrument as well. So that's my last comment. Thank you.
Thank you. Julian, a last word, a reflection for everyone.
I think it was mentioned by Norbert, it's become, I mean, it's a risk. It's a risk we have to manage, like credit risk, like market risk. It has to be embedded in everything we do. That's all. There's no other choice. You know, I have 3 girls. I look at my kids. I think their generation is going to care a lot more about these things than our generation have. And they are the investor of tomorrow, and they will not buy anything which is not in line with what we are talking about today.
Great point. Norbert, please.
I think I echo what everyone has said, and the focus really is on net zero and transition, and how finance can come together using technology, innovation, and both the demand supply, international cooperation to bring about change on climate change mitigation and adaptation. I think that's the key development of how the China bond market evolves.
Thank you, everyone. We need to finish up. You heard it here. This extraordinary conversation from Manshu's description of what investors are saying to Julian's really fantastic comments about everything is going to have to be put through this filter, which is absolutely correct. We face a millennial epochal challenge to our societies and our economies of adapting, as well as heading off further or extreme risk that now presents itself to us. You know, it is a difficult change. We have managed to build wealth on the back of a fossil fuel economy. Those fossil fuels have given us what we have today, all the things that we take for granted and think are important. But we've now discovered they come at an enormous cost, which we now have to sort out very, very quickly. That's the challenge we face. You're going to see some other developments coming through very quickly. And I want to stress that some of these are going to be covered in our forthcoming State of the Market report, which will be the global State of the Market report, which we launch quite soon. Watch out for this particular space. But we will see further work on clarity about what needs to be done. Green projects, catalogue, taxonomies, etc. Transition, how we transition high carbon companies and entities to low carbon, and countries for that matter, is something we're working on around the world right now. And I know this is a topic of big discussion in China. Let's think of this as a future extension of the universe of what can be qualified as a climate change relevant investment. We will see more work on resilience investments. We've only just begun to touch this. We need to clarify that. We will see sustainability bonds, which is essentially an entity transition. So how do you work out whether a company like Hebei Iron and Steel has a transition strategy which is commensurate with the challenge we have to do? How do you do that? And if they have got a good strategy, then can we say the whole company should be certified, and they issue sustainability bonds linked to that strategy? We would support that. That's very much this year's conversation. We'll see that. And then I really like the point that Pei Wan was making around, well, I'm going to say for me, it led to thinking about direct air capture, which is one of the big things we're going to have to do in the near future. So a bit of a step beyond what you were saying, but carbon markets is a starting point. There's so much to do. Of course, for those of us that have the chance to work in this area, it is an extraordinary privilege. We have the privilege of working in the most dynamic financial market on the planet, which not only is exciting, but also contributing substantially to addressing the most terrifying problem we face as a species. That is a privilege and a responsibility. It means that we must deliver. And I say that to everyone listening in today. We as a community have a job to do. It's not just a job within our businesses, within our organizations, within our institutions. It's a job on behalf of the whole of society, on behalf of the human species. I'm going to say, I think we can do it, but it is a very close thing. So good luck. Thank you for joining us today. Thank you, Julian. Thank you, Peiwan. Thank you, Olivia. Thank you, Norbert. And above all, Manshu, thank you for the report. Please, everyone, read the report, go out there and change the world.
Thank you, everyone.